Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. On this video today, we are going to cover our weekly portfolio update. We do this every Sunday morning. We did add $1,491 in new capital to the portfolio, so we will go over what we bought with those funds, also any dividends received, any options we received as well. For those of you who may be new to the channel, well, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio every week. That's what this video is. You're going to see what I bought this week and every week. Again, any dividends we received, any options we were in. And I also do larger purchases. If I was to do a side job when I get my bonus, usually around April, or if I was to run any other funds, maybe if I win the lotto or something like that, I guess I'd have to play the lotto to be able to win the lotto, but that's a different story. I do cover all my investments into the portfolio on this channel. I don't have a paid Patreon account. I'm not trying to get you to sign up for any emails or any newsletters or anything like that. It's free to see what I'm doing on this channel, but if you would like to help out the channel, if you could take a couple seconds, it's free to do. Hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Hit that subscribe button down below. Click the notification bell so you're notified whenever I put out any new content. And there is the thanks button down below for anyone who might want to buy me a cup of coffee and support the channel that way. And again, Jesse Hernandez, really appreciate you. You so far are the only funds I've received on the channel. I do need to put my banking information so I can get that. And that really boils down to, I think the $9.99 turns into about $4.99 after they take their cut of that. But really do appreciate all of you out there who've taken the time to watch, comment, and like the videos, as I said before. All right, let's get into it. Options. It has not been a good year for options. I will be completely honest. The market has been crazy. Up one week, down the next. Sometimes it's up and down within the same week, like this week. Started out the week, I don't know, it seemed like it started out the week pretty good. But then obviously midweek was down quite a bit. And then Friday, crazy rebound there. So options for me have not been going very well. I do pretty conservative options where I'm trying to keep the shares that I own, but also collect some options premiums. So I'm doing out of the money covered calls and cash secured puts. Running the wheel strategy is what I'm doing, but it has not really been a very good start to the year. So we'll keep plugging away, and whenever I do hit some options, I'll report out on them. But so far this year, not very good. Dividends. First week in a while, we haven't received any dividends, so nothing really to touch on there either. So we will get into the first funds added to the portfolio, and we did that on March 10th. We added $1,053.09, and with those funds, we picked up actually 4 shares of Google, but I went in and I picked up 2 shares. I was going to add to my Owens Corning position, but I decided against it with Google in the 160s still. I added 2 shares at 166.06, ticker GOOGL, is out of the information technology sector. And then I actually went back in and said, to heck with it, let's add 2 more. So I picked up 2 more at 166.23. So 4 shares there total for the week. We added 4 shares to our Comcast Corporation position, ticker CMCSA. This is out of the communications sector. Picked up those shares at $37.44. 2 more shares to our Occidental Petroleum position, ticker OXY, at $47.45. And 2 more shares to our Lam Research position, ticker LRCX, also out of the information technology sector. Picked up those shares at $76.44. Occidental is out of the energy sector there. So a lot of communications, information technology, and the energy sector was where we spread those funds out of. And the $1,053.09 new shares picked up added additional $12.24 in passive income over the next calendar year. We went back into the portfolio on the 12th, added an additional $438 even. With those funds, we picked up 1 share of Vale, ticker VALE. This is out of the materials sector. Picked up that share at $9.23. Added a little bit to our Haverty Furnitures position, ticker HVT. 2 more shares there at $21.74. 4 shares, and these next 2 are our weekly buys. I buy SCHD and VTI every single week, regardless of what the market is. They were pulled back this week, so Stuck with the same typical buys that we do, usually 3 to 4 shares. This week we picked up 4 shares of SCHD, Schwab Strategic Dividend Growth ETF. They're at $27.48. And one more share in our Vanguard Total Stock Market ETF, ticker VTI. Picked up that one share at $275.38. The $438 added, the new shares picked up with those funds, added an additional $10.98 in passive income over the next calendar year. Total invested $1,491.09. Total passive income added $23.22. Let's run through the sector weights here real quick. Communications makes up 10.91% of the portfolio. Consumer discretionary at 2.05%. Consumer staples makes up 7.97%. Energy sits at 8.73%. Financials at 2.42%. Healthcare is in second place there at 13.78% of the total portfolio. Industrials at 6.43%. Technology makes up 13.83%. It is the largest piece of the pie right now. Materials makes up 9%, utilities at 9.08%, REITs and real estate makes up 5.68%, and ETFs rounds out the portfolio at 10.11%. Eventually, ETFs will overtake the overall portfolio and be the largest pie just by the nature of adding to it every single week, regardless of the market. Over here to the right, you can see those same breakdown here. Here's the percentages that matches up with the pie, but then the dollar amounts allocated to each sector as well. All right, here it is. I show this every week. I think it's important for those of us in this space who are talking about finances. I know we're not financial advisors or telling you what to buy, but we are showing you, or should be showing you, what we are buying. I think it's important for you to see a real portfolio built out over time, so you can see I'm not just talking about investing, I am doing it as well. So I like to show my portfolio every Sunday. Some channels don't, but it hopefully helps some of you out there see that you can do it. I am not a financial guru. I did not go to college for this. I'm just like you. I go to work every day. I'm married. I have a couple kids. Maybe some of you out there aren't married and have a couple kids, but I'm married and have a couple kids. I do this on my spare time. It is a bit of a hobby of mine. And if I can do it with no formal education or background in it, you certainly can too. You do not have to pay someone to manage your money. You can do that. And I know maybe buying individual stocks is scary. So if you don't want to do that, you can always stick to ETFs or index funds. Warren Buffett would recommend something that tracks the S&P 500. So something like VOO or SPY. I do VTI and SCHD, but there's other ones out there like SCHD, VYM, several others that are dividend growth investment platforms. And VTI is just the total stock market, United States stock market. S&P 500 is just the top 500s. This includes small caps, which is why I like to include VTI. But let's run through this here. And again, hopefully this helps some of you out there maybe who have just started your portfolios. Maybe you're seeing some red, and that is scary. Oh, I'm losing money. But technically, you're not losing any money unless you sell the position, right? I'm down 10.69% on Comcast. I'm still adding to Comcast. If I thought it was a good buy at $39.66, I should think it's a better buy at $35.42, right? That's the idea there. I think it's a good company. I think their future is still bright, so I'm willing to continue to add to them even though I'm seeing red in the portfolio. Eventually, this will turn around. Some other ones, HPQ just turned red, right? So I'd like to add to that now that it's below my cost basis slightly. Maybe it pulls back even more. HVT, saw I added a little bit there, down 16%, but if I thought it was a good buy at $25.31, why wouldn't I add to it at $21.09? So on and so forth. So that is why I'm showing this. So hopefully it gives some of you the confidence that, oh my goodness, just because it's in the red does not mean it's time to sell. Don't panic sell and lock in a loss, because if I was to sell Comcast, I'd be down 10%, right? But only if I sell Comcast. If I can continue to nibble on this one, bring my cost basis down, eventually I believe it's going to turn around and turn back into green. And you've seen that if you followed the channel with some of the positions I've had. Comcast or CVS, for example. I think CVS was almost down 20 or 25% at one point here in the last 2 or 3 months. And now you can see it's back up 1.83%. But I was buying it when it was down 20%, right? Because if it was a good buy at $64, it was a much better buy at $50 or whatever it dropped to. So that's the idea. Hopefully this gives you the confidence to hold on to those positions. If you've done the research and you know they're good positions, you've picked a good price to buy them at, done your research on discounted cash flow analysis or something along those lines where you figured out a good price. If it drops below that you should continue to buy if it's a good company. Now, if you didn't do any research and you were just out there willy-nilly buying stuff, you don't know what you're holding, then maybe it's time to get your portfolio in order and do some research. Stick to index funds, ETFs, while you learn how to evaluate stocks. Nothing wrong with that. All right. Here's the ticker, all the different positions in the portfolio, total shares here in this column, current price as of the close of business on Friday, and all the numbers we're going to look at will be as of the close of business on Friday. Market value here, my average cost per share. This does include reinvested dividends. Same thing here with purchase price. This is money out of my pocket plus the dividends reinvested. Total return here, whether I'm up or down, I'm going to show it. Percent return here, if I'm in the green, obviously I'm up. If I'm in the red, I am down. What sector each company falls in, whether they're quarterly, monthly, semi-annual payer. Also, you'll see highlighted here, these are the companies that have already announced dividend raises for the year. And as they announce a dividend raise, I'll obviously adjust it here and highlight it in yellow so you can see and we can talk about it. Quarterly, monthly, semi-annual payer. Current yield as of the close of business on Friday. My yield on cost. Portfolio weighting. So what we saw on the previous slide was each sector's weighting. This is each individual position's weighting. And I do have a rule in the portfolio. I don't want any one position to be more than 10%, and I don't want any one sector to be more than 25% of the portfolio. That does not include ETFs and index funds, right? If I have ETFs and index funds in the portfolio, I will let them run over 10% or over 25% of the portfolio if they get that large. Again, just by the nature of adding to SCHD and VTI every week, eventually they will get larger than other positions in the portfolio. Estimated annual income here, payout months here, dividend growth year over year, and I do adjust this as they adjust their dividends. I adjust their dividend growth when where it sits at 15% of a 52-week low. So let's talk through this a little bit. This here is a high water mark. Let's use Occidental, for example. I'm still adding to Occidental, right? 15% of a 52-week low is $51.94. Obviously, it's lower than that currently, so I'm still adding. It's also lower than my cost basis. But I don't want this right here, my average cost per share, to go over $51.94. So I'll continue to add to it, even if the price goes over $51.94, so long as my average cost per share doesn't go over $51.94. Right now, I can bring my cost down a little bit because it's down where I started buying it. But if it was to turn green and go up, that's what I'd use that for. This is a high water mark for where I want my average cost per share to be, right? That's how I use that. Now, total shares, 7,012.084 shares. Market value, $342,476.48. My out-of-pocket, $318,771.31. And again, this does include reinvested dividends, so don't think this is just money I put into it. I think I'm close to 30 or 35,000. Maybe I'll cover that total dividends I've received in the portfolio over the last 4 years. But I think there's 30,000 or a little more than 30,000 of reinvested dividends included in this price here. Total return, $23,705.18. I am still up 7.44%. So even though a lot of the market has really pulled back I think the NASDAQ is now down almost 20%, or maybe it has hit 20% at this point. With the rebound on Friday, I think it's not quite there still, but I think at one point it hit it down about 20%. But I am only down a little over 1%, not quite 2% right yet, or maybe right around 2%. So the portfolio is holding up pretty well overall. Current yield is 3.74%. My yield on cost is 4.018%. And this is what I really focus on. I'm not focused over here on total return or percent return. Nice to see. Obviously, I want to see my positive returns. But I do not get any of these funds unless I sell out of all the positions in the portfolio. So does it really matter? I mean, total return, again, is nice to see, but does it really matter? Unless you're planning on selling positions, right? Then you don't lock any of this in. Even if it was down, you wouldn't lock any of this in. Now, again, I don't want to be down. Obviously, I want to be positive returns, but it's not my focus. Same thing with percent return, not my focus. This is what I'm focused on. That's why it's circled in red. The dividends paid out by all the different positions in the portfolio, and it continues to go up week over week, month over month, year over year as I add new capital, as the positions in the portfolio pay out their dividends, as they raise their dividends, and as when they pay out those dividends, as they get reinvested and buy more shares. Currently sits at $12,809 even And I am hopeful that by the end of March, we will be very close to busting over that the elusive $13,000 a year in annual dividends. I know we've sold a couple of different positions over the last month or so and reallocated funds. To be honest with you, I was actually considering doing that one more time and selling out of Union Pacific and Nutrien and reallocating funds across here, trying to get Google to 100 shares, Owens Corning to 100 shares while it's down right now. But I think I'm going to hold steady. I don't know that I'm going to do that. I don't think it really gains me anything. And whenever I did the math and kind of reallocated the funds, it brought this down again, I think around to 12,600. So I think I'm just going to stick with what I've got, continue to buy shares while they're down of positions. Google is slightly up right now. I'm hoping it drops down to in the 150s or back to 162. But as long as it stays here around the mid 160s, I'm going to continue to build this out. Hopefully we can get it to 100 shares. Owens Corning is starting to look attractive again. It dropped into the 130s. That's why I considered adding to it here. But I think Google's a better position than Owens Corning. So I didn't add to it, but I do want to build this one out to 100 shares as well. Procter & Gamble is another one I'd like to get to 100 shares. So Union Pacific as well. I'm not really adding there to any of the any railroads. I feel like they're still pulling back. This one was, I think, up 18 or 19% last week, so it continues to pull back. So maybe we add to this one if it gets low enough. But it was on the potential consideration to get rid of Union Pacific and NTR. Let me know what you think of that in the comment section down below. Well, that is really the update here. Dividend growth year over year, 5.66%. This will adjust as well as they raise or lower their payout ratio. I'll adjust that also. All right, that is really it. I really need to put another updated video out there. We have no snow out back anymore. It is not white at all. Waves are crashing today. Wind is blowing. So I'll have to take a good picture. Maybe as the sun rises today, I'll get a good one and update this picture. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So let me know what's going on in your portfolio. What are you buying? What are you selling? Seems like, again, it's been a crazy market. One day it's all red. One day we get a bit of green. Up and down throughout the week. Crazy market right now. Hopefully your portfolio is doing well. Again, let me know what you're buying. What are you focused on? And I'll see you in the next one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing journey, educational, and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount. You're not completely always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.